Welcome to the Vital Dawn podcast for Wednesday, July 14th. U.S. equity futures are mixed, so the S&P futures are flat. The Dow futures are down 20 points. That's about 6 basis points. And the NASDAQ futures are extending their gains up about 50 points. That's about 33 basis points. So continuing the price action we've been seeing in the U.S. lately, whereby the market is getting propped up by tech, and then specifically a handful of large cap tech companies, while the rest of the market, which you can see in the equal weighted S&P, trades poorly, especially cyclical groups, which remain very much for sale. You saw that yesterday, which the underlying price action yesterday was actually a lot weaker than it looked on the surface. In Europe, the major indices are trading down about 15 to 30 basis points, and you're actually seeing in Europe outperformance in cyclical groups this morning. So autos, banks, basic resources are all doing well. Other groups are trading in the red. Asia generally finished lower. Japan, Hong Kong, mainland China all closed in the red. You did see some mild strength in Australia and India. So nothing too dramatic for this morning, although I'd say the tenor of news on the macro front was somewhat negative. You had another very hot inflation number, this time out of the UK. The CPI for June overshot the street expectation. This came after the US number yesterday. I generally think markets are still kind of believers in the transitory thesis around inflation. So I don't think there's enormous anxiety about inflation galloping, higher for months and months going forward. But clearly, it's not the type of headline that investors want to see right now, with inflation continuing to accelerate rather than starting to at least plateau and descend from the recent highs. So you had another hot inflation figure this morning. You had another hawkish central bank action this morning. So the New Zealand central bank came out and announced the end of its QE program. This is leading some to think you could see New Zealand hike rates as soon as August. That would be the first major central bank on the planet to hike rates since the pandemic. So, you've seen this pattern from a host of central banks, including the Fed, either rhetorically or through explicit action. Central banks are now dialing back accommodation. Again, they're doing it at an extraordinary glacial pace. So it's nothing to be too alarmed about, but this is certainly a theme that markets are going to have to grapple with now, probably for the next year plus, as central banks dial back the aggressive monetary accommodation that they doled out during the pandemic. So hot inflation, hawkish central bank, those are the two big macro stories this morning. Senate Democrats reached a deal on the portion of their infrastructure plan that they plan on passing through reconciliation. So this is a $3.5 trillion headline package. This is still in very, very early stages. I think Democrats, under a best case scenario, intend on having this passed by the fall. Again, they have to have all 50 senators, all 50 Democratic senators on board in order for it to get out of the Senate. And then, Member Pelosi has a very, very narrow majority in the House as well. So that part of the fiscal initiative is still in very, very early stages. I think more important in the near term will be the fate of the bipartisan initiative. So remember, there was a bipartisan agreement reached a couple of weeks ago. They are now attempting to translate that agreement into a passable bill. That process is underway as we speak. They could have something out as soon as Friday. I think stocks should be rooting for that bipartisan bill to pass the Senate and then pass the House relatively quickly. If it does, I think that will, foreclose for years the risk of large tax hikes. If you see the bipartisan agreement collapse, or if you see Pelosi continuing to insist that she will not consider a bipartisan bill until the Senate gives her a reconciliation bill, I think you are going to have tax hike risks stay on the table. So I think the bipartisan bill, that's the one to be watching. We should see a lot more news out on that over the coming days. But again, stocks should be rooting for that to pass, and to pass quickly. And I write more about that. There's a link in the piece this morning. I sent that a couple of days ago, just saying how, the bipartisan agreement really, I think, will determine the risk of tax hikes. If it can pass, get out of Congress quickly, the odds of anything occurring on the tax front are very low. That's the broader macro narrative. On the micro front, there's really nothing too major. We're still in the very, very early stages of earnings season. You had American Airlines come out last night with an upside pre-announcement for Q2. That's certainly positive. However, I think, the big focus now is on the go-forward environment, given that you have seen, a deterioration in the COVID news flow with rising transmissions from the Delta variant, a plateauing of the pace of vaccination. So I think investors are most curious to hear how travel trends have been pacing the last several weeks, just given the deterioration in COVID headlines. So Delta will formally report earnings this morning. They'll have more to say on that. I think that's, that will be more interesting than the American Air upside pre-announcement for Q2. There was a bullish article on Bloomberg talking about Apple telling its suppliers to ramp up iPhone builds for the new iPhone coming out in a couple of months. Certainly positive. That's helping Apple rally this morning. This has been obviously, like I said earlier, Supercap Tech have been an enormous source of support for this market. And that Apple Bloomberg article just kind of feeds into that. And then, just an article on Reuters talking about how Jefferies plans on selling a 5% stake in itself to Japan's second largest bank. So those are all the major items for this morning as far as news is concerned. On the calendar today, you have the U.S. PPI at 8:30, so another inflation figure for the U.S. Powell will be testifying before the House today at 12. He'll be before the Senate tomorrow. I suspect you're not going to really see his messaging change all that much. I think he will continue to strongly reiterate his belief that the inflationary pressures will be transitory. He's going to probably get a ton of questions on inflation from the House and the Senate, so that we'll be talking about it a lot, but I don't think his messaging will shift. And as far as tapering is concerned, I don't think the CPI really accelerates anything, but it does cement in place that you are probably going to see tapering begin in December. There is a July meeting coming up. I don't think you're going to see Powell start to communicate formally tapering at the July meeting. I think that will be more a Jackson Hole event that is at the end of August. But there is a rising risk that you see the July press conference talk a lot more about tapering. So again, I think it's more cementing in place the expectation. You have taperings beginning in December at about a $15 billion per month pace that will wrap up quantitative easing in the U.S. by the middle of next year. And then in addition to Powell, you have earnings out this morning. So Bank of America, BlackRock, Citigroup, Delta, PNC, and Wells Fargo are all out this morning. No one is scheduled for after the close. So that is everything for today, Wednesday, July 14th. Thank you for listening.